Hello, viewers. Welcome to Sensor 360 Investor channel, where we use best practices from around the globe, from the companies that we invest in, and apply those to the investing process. And within our 360 view framework of the investing process, today we're going to focus a little bit on the wealth segment, which is hidden within the globe. And we're going to look at a system called the dogs of the DOW. This has been around for quite a while now, since the early 90s. It was made famous by a book called Dogs of the DOW by Michael O'Higgins. And before we begin, a quick word about a disclaimer: this is not providing financial advice. Please pause, speed, and then continue. Thank you. Okay, so without much further ado, let's begin the show. And let's take a look at the basic system first. So as I mentioned, this stems from a book authored by Michael B. O'Higgins back in 1991 called Beating the DOW. And so that book is a good little read, and it really does detail the methodology. It's obviously over 30 years time tested at this stage. So basically, the core concept, it's a dividend investing strategy, focuses on dividend paying stocks and selects a basket of stocks from the Dow index, which is the top 30 blue chip companies on the market. And then basically you select the 10 highest paying dividend yield stocks on an annual basis. And technically you could start any time of the year, but the recommendation is that you start at the beginning of the year. Each position is equally weighted. So for example, if you had $100,000 and you're looking at 10 positions, and each position would hold amount-wise $10,000 worth of that stock. So you buy the entire basket and you hold for 1 year. And as mentioned, the recommendation is that you buy the basket on the first trading day of the calendar year, put your orders in pre-open, and then the opening price is what you would get filled at. Then you hold that for a year, and then you basically wash, rinse, repeat annually. But then the key takeaway here really is the fact that the methodology has outperformed considerably. And here we can see that, just looking back over since 2000, it's actually beaten the Dow every single year. So if we look at 2022, so these were the 10 stocks that made the selection in 2022. This was the price at the closing price at the end of the year. So this final days worth of trading, the yield at the time, 494 for the Dow, etc. So pretty good. So it's averaging somewhere in the 3% range. And then this is the price as the data was pulled on the end of last week on 12/23. This was the closing price, and then we can see what the yield there was, and the change basically on the stock. And then it's kind of interesting that even though the market's been down considerably this year, there are some stocks like Intel, which has taken a bath, but equally there's some of the stocks like Chevron, which has showed quite the appreciation. And overall, down here we can see basically that the yield's been about 3.89%, and the dogs of the Dow is down about collectively down about 1.6. Small dogs, which are the puppies, are down more at 20.8. The Dow itself, Dow 30, is down about 8.3, and the index is down about 8.6. So relative to the S&P 500, this has done exceptionally well. And again, once more, the dogs of the Dow have beaten their index that they are derived from. And if you want to read more, there's actually a website called dogsofthedow.com, which has been tracking this methodology for a very long time. Okay, so if we look at the stocks that are making the grade for next year, this data has been pulled as of close of trading day today. As it currently stands, then these would be your 10 stocks that you would buy into, equal weighted position for each of these, and then just hold them and track them, and see what, and then hopefully if history repeats itself, which it has for a long time, and then you will get pretty good returns. So Verizon's paying 6.6, Intel's paying 5.6, down 5 points. Walgreens, Boots Alliance is about 4.97. 3M 4.96 and IBM's 4.6. So you're certainly getting respectable dividends here, which gives you a little bit of a cushion against price fluctuations. Then you got to get down to Cisco. We know CVX has outsized performance this year. Then you get in financials, and then then you also have one medical stock at the bottom, Amgen at 2.94. So there's a mix of some growth in there as well. So that would be your basket. And if you wanted to pursue this strategy, then you want to take a look at this at the end of the calendar year and position yourself for the buying on the first trading day of 2023. So this list is likely to persist over the next 3 or 4 days. So that completes this video. I just thought I'd share something a little bit different for somebody looking for more of an income-based strategy. There are multiple dividend strategies out there, so this certainly is a well-known one and probably a good place to start, just because of the sheer simplicity of using this. It's kind of one and done for the year, and then just kind of rebalance at the end of the year and start again with a fresh list. So if you don't have time to manage your assets and your investing, this certainly is a great place to start. There are other different strategies out there as well, but those would require a little bit more time and effort involved. Okay, so let's wrap this video up by saying if you are a subscriber, and so thank you for subscribing. If you haven't done so, I can ask you to do that, would be great. If you like this video, please give it a thumbs up and share with your family and friends. If you're inclined to, leave a comment. Thanks for watching. Thanks for listening. Goodbye for now. Thank you.